Have you heard someone say, Indiana capped its property taxes at 2%? Or maybe, everyone's getting a tax break. Well, neither statement tells the whole story. Indiana recently passed one of the biggest property tax reform bills we've seen in years. And while there are some great benefits for homeowners, there are also a lot of misconceptions. Today, I'm gonna break down the 7 biggest changes you need to know about Senate Enrolled Act 1 of 2025. We're gonna cover the new homestead property tax credit, new tax credits for seniors, a property tax protection that could help qualifying seniors avoid large year-over-year tax increases, new benefits for blind and disabled homeowners, the January 15th application deadline, and what I think every Indiana homeowner should do next. Whether you're a homeowner today or hope to be one someday, this information could save you a lot of money. I'm Tony Janko, owner of Janko Realty Group, aka Mr. Hendricks County. Let's jump right in. Change number 1. Why did Indiana change its property tax law? Over the past several years, property taxes have become one of the biggest concerns I hear from homeowners. People ask me all the time, Tony, why'd my taxes go up so much? And the biggest reason is actually pretty simple. Home values increased. As home values increase, assessed values increase. And in many areas, that meant property tax bills increased as well. Indiana lawmakers heard these concerns and responded by passing the Senate Enrolled Act 1 of 2025. The goal was to provide meaningful property tax relief while continuing to fund schools, police, fire, and other local government services. Some of these changes happen automatically. Others require homeowners to apply. So let's start with one of the biggest changes that affect nearly every homeowner. Change number 2, the new homestead property tax credit. Beginning with 2026 property tax bills, Indiana created a brand new supplemental homestead property tax credit. And here's what it means. If your home qualifies as your homestead, which simply means it's your primary residence, you may automatically receive a credit equal to 10% of your property tax bill, up to a maximum of $300 each year. This isn't just for seniors, this applies to many homeowners across Indiana. So if you own and live in your home, this is one of the biggest changes in the new law. It's one of the ways Indiana is helping reduce property tax bills for its homeowners. Change number 3, the new over 65 property tax credit. Now let's talk about seniors. Indiana replaced the old over 65 deduction with a new over 65 property tax credit worth $150 each year for qualifying homeowners. Now $150 certainly is nice, but honestly, I don't think that's the biggest story. The biggest improvement is actually something else. Indiana removed the old assessed value limitation. Why is that important? Imagine you lived in your home for 25 or 30 years. Maybe you bought it for $150,000 and today it's worth $450,000. That doesn't necessarily mean you're wealthy. It simply means your home is appreciated over time. Under the previous rules, that increased assessment value could affect eligibility. Under the new law, that assessed value limitation has been removed, allowing for more qualifying seniors to potentially receive this benefit. And I think that's a really big, meaningful improvement. Change number 4. The 2% property tax protection. Now we get to what I believe is the biggest benefit in the entire law for qualifying seniors. You've probably heard someone say, property taxes can only go up 2% now. That's not exactly true. This is not a blanket rule that applies to every Indiana homeowner. Instead, this protection is tied to the over 65 circuit breaker credit. For homeowners who qualify, this credit is designed to generally limit the increase in their homestead property tax liability to about 2% over the previous year's property tax liability. Let's look at a simple example. Suppose your property tax bill was $2,000. Without this protection, your tax bill could increase much more depending on changes in assessed value, tax rates, and other factors. But if you qualify for the over 65 circuit breaker credit, your increase is generally limited to around 2%. That means instead of your bill increasing several $100s, it could increase to approximately $2,040. Now think of someone living on Social Security or retirement income. Knowing your property taxes are generally protected from major increases can provide real peace of mind. This is one of the reasons why I wanted to make this video. A lot of homeowners have heard about the 2% rule, but many don't realize it's specifically connected to that qualifying for the over 65 circuit breaker credit. Thinking about relocating to the Indianapolis area? Well, I've got just a thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research, and I've linked it below. From top employers to the best hospitals and a boatload of other things that you need to know before making the move. The best part is this guide is 100% free. That's right, you heard me, 100% free. Just click the link in the description below or the top pinned comments. Hope that helps. Change number 5, who qualifies? So who qualifies for these senior benefits? Generally speaking, you must be at least 65 years old. The home must be your primary residence or homestead. There are current income limitations. Up to $60,000 a year for an individual or $70,000 for a married couple filing jointly. If you're close to those limits or you're simply not sure, don't guess. Call your auditor's office. They can tell you exactly which credits you'll qualify for. Change number 6, blind and disabled property tax credit. Another important change affects homeowners who are blind or disabled. Indiana replaced the previous deduction with a new $125 blind or disabled property tax credit. One thing that's really important to know, even if you previously received this deduction, the state encourages eligible homeowners to apply under the new credit program so there isn't an interruption in receiving this benefit. Don't assume everything automatically transfers over. Take a few minutes to verify your eligibility. Change number 7, don't miss the January 15th deadline. If there's one date I want you to remember from today's video, it's January 15th. If you're applying for one of these credits for the first time, or you're unsure whether you need to reapply, contact your county auditor well before January 15th. Ask them, do I qualify? Do you have everything you need from me? Is there any paperwork I still need to complete? The simple phone call could save you hundreds of dollars. And my advice as a realtor, I know most people come to my channel because they're buying or selling a home, but I also believe part of my job is helping homeowners understand programs that could save them money. And here's what I'd recommend. If you're over 65, call your county auditor. If your parents own a home, share this video with them. If your grandparents own a home, send it to them. If you're younger, take a few minutes to understand these programs. One day they may benefit you or someone you care about. I hope today's video helped clear up some of the confusion surrounding Indiana's new property tax law. The biggest takeaway is there's real opportunities for homeowners to save some money. But some of those savings require you to know what's available and in some cases take action. If you found this video helpful, I'd really appreciate it if you'd hit the like button and subscribe to the channel. Every week I share information about Indiana real estate, the housing market, home ownership, and tips to help buyers and sellers make smarter decisions. If there's another real estate topic you'd like me to explain, leave it in the comments below. I'm Tony Janko, Mr. Hendricks County. Thanks.